Let's talk more about where this rally goes from here this morning with Fundstrat Global Advisors Head of Research and CNBC contributor Tom Lee, who recently raised his target to S&P 6K. Tom, good to have you. I loved your note the other day looking at what S&P revenue has done in the face of declining inflation. And your general point is that real revenue has accelerated, and that kind of explains why equities have been so resilient.
That's right, Carl. As you know, many investors and pundits thought as inflation fell, and it's been cut in half in the last 2 years, that would cause revenue growth not only to hit a wall, but that earnings would stall. But instead, S&P revenue growth is going to be over 5% this quarter. And on a real basis, that's over plus 2%. And that's the strongest. It's really one of the strongest numbers in more than 2 years. And so it is a really high quality earnings season so far. And, close to 80%, or actually more than 80% are beating earnings so far. So it's a good beat season, but it's early.
Right. And how much of it is due to financials? Is any kind of tailwind, although we heard various comments about this, if a Fed tailwind does exist, is it likely to affect other areas of the economy as much as the banks?
Well, in your opening comments, you talked about industrials, and that's something to watch because last week financials reported, and it was, pretty much universally better than expected, and financials are doing really well year to date. But the other group that's very sensitive to the Fed cutting would be industrials, and there's a lot of industrial reports this week. It's about a quarter of the S&P, but I'd say it's so far so good. And again, industrials are doing well in the face of an ISM that's kind of been at rock bottom for 2 years now.
Tom, how much would you ascribe the recent momentum to aspects of the election as that draws near, just over 2 weeks away?
I think that's been a dynamic. I mean, I've been fooled by seasonality because I figured from September to Election Day, markets would be very tentative because this is an extremely close race. I mean, this is a coin toss, according to Nate Silver. But something that Stan Druckenmiller said last week might explain a lot, that markets are betting that Republicans could take the Senate, and that actually could ignite animal spirits. So there may be underlying momentum that the Republicans take parts of Congress, and that's why markets are bullish.
This just in. South Korea's semiconductor behemoth, SK Hynix, a crucial supplier to Nvidia, is making headlines with a jaw-dropping quarterly profit that is rewriting the record books. But before you picture a boardroom of executives popping champagne, let's just say there's been more going on than just pocketing profits. The company has seen its revenues soar to unprecedented heights, fueled by the insatiable demand for artificial intelligence technology. Among the whispers on the Wall Street grapevine are tales of booming sales in premium memory products, catapulting SK Hynix to new heights. But what exactly triggered this meteoric rise in an industry that's always been a bit of a roller coaster? Was it the high bandwidth memory chips? Or perhaps the enterprise solid-state drives? And how are stalwarts like Nvidia playing into this tale of fiscal fables? Buckle up as we dive deep into the SK Hynix saga, where technology meets tenacity and where the stakes are as high as the bandwidth. Welcome back, everyone, to Investocracy.
Am I on TV?
You're on TV.
That's incredible. I'm with Becky.
With the greatest show, the greatest show in the world.
This is the greatest show on earth.
Wow, keep that tape. Oh. And by the way, with what is arguably the most successful company in America today.
Well,
Can we just say that? Just on the trajectory it's been.
Probably not quite market cap, but in terms of getting to this market cap.
Yes, unbelievable.
Like 16 days or whatever the hell.
It wasn't quite 16 days. 32 years and 16 days.
That was NVIDIA's CEO, Jensen Huang, making a surprise visit to the Squawk set last Friday. That stock has been on a powerful run over the last year. It's up nearly 200%. Its market cap topping $3.3 trillion. Joining us right now with more on NVIDIA's bull run is Ben Reitzes. He is Melius Research, head of technology research. Ben, you say that when you reiterate your buy rating on this, you get a lot of eye rolls. What do you tell the skeptics who are doubters?
Well, this is like when Apple did the iPhone, and if you gave up on Apple in year 2 or 3 of the iPhone, you missed a lot. So this is really in the beginning. And what people, really are skeptical about is the size. And they're already a huge market cap here, but there's still room to go. And obviously, Jensen running around New York meeting investors all over the East Coast. He's got a lot of good things to say. I think that you should listen to him.
Nvidia, you actually say, is your second cheapest stock in your group. How do you look at it on a PE basis?
Well, I look at PE to growth, and there's a ton of upside next year to our growth estimate, and revenues of 40%, but there's upside there, and there's probably not as much upside in any other stock. So I think it's trading at about 1x PE to growth for next year. And that's really attractive for a name like this, as long as the numbers are there. And if obviously if the direction is upwards to the estimates, that's really attractive still. And I think that each day you got to walk in and say, what are our checks showing us? What is the research showing us from the bottoms up? And it's still there.
Demand for Blackwell, what are you seeing in your channel checks at that point?
It's pretty huge. The big issue was whether they could get the production up and running and get through their mask issue, and they seem to have done that, and whether they can get through the negative mix shift of scaling a new product. And I think they're going to do that pretty well within a couple quarters. And the demand looks really insane, like you said. These big clouds, you got to understand, these are huge capitalized companies, and if they're going to beat their cloud numbers that they're going to show the street, meaning Microsoft, Google, Amazon, they got to buy Blackwell, and they got to get the customers up and running, or else they're not going to beat numbers. And that's it. That's how you get the sequential acceleration to their cloud business. The companies will say a lot of different things that, it's because of how great they are in cloud, but really it's because investors run to their platform to use the latest and greatest from Nvidia. And that's how they're going to beat, and they're going to buy a ton. And pretty excited.
In the fast-paced arena of semiconductors, SK Hynix has emerged as the gladiator of the moment, as the company minted a milestone with a staggering 17.5731 trillion won in revenue. Up by 7% from the previous quarter, it waved a triumphant banner over a landscape once fraught with uncertainty. The bottom line? A hefty operating profit of 7.03 trillion won, a figure that would make any competitor's CFO break a sweat. Of course, it's no secret that SK Hynix is riding the AI wave, but with technology evolving faster than a tweet can trend, was this success really predictable? Before diving into the nitty-gritty of numbers, there's a bit of wisdom from the trading floor that goes, invest in something that neither rusts nor rots. Apparently, high bandwidth memory fits this bill nicely, with SK Hynix's sales of these mighty chips exploding by more than 70% quarter over quarter, and accounting for 30% of the total DRAM revenue. It seems more than just luck is at play. Kim Woo-hyun, the company's vice president and chief financial officer, didn't shy away from reminding us all of Hynix's newfound might, stating, "We have solidified our position as the world's #1 AI memory company." Quite the flex in today's cutthroat market. But wait, there's more. As if keeping up with the Kardashians wasn't hard enough, try keeping up with the SK Hynix production lines as they accelerate the output of their advanced 8-layer and 12-layer HBM3E models. Not just any chips, these are the creme de la creme desired by AI developers and data centers alike. These investments are akin to laying golden eggs for the future, projecting market dominance with an HBM share target of 40% in the fourth quarter. The audience? Nothing short of global. From Silicon Valley's corridors to bustling Asian tech hubs, all clamoring for a piece of this dram pie. Now, if you've ever wondered how SK Hynix fares alongside its heavyweight peers, consider this. The company swirled out of a September slump, where stock prices had tumbled following a dreaded Morgan Stanley downgrade, quite the nemesis of investor confidence. Yet against the odds, just one bold step, cranking up mass production of its state-of-the-art memory chips, saw shares bounce back robustly, gaining a solid 9%. There's a lesson here somewhere about perseverance and, perhaps, reading the fine print in analyst reports. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our X account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
What about their gross margins? There has been some concern recently about whether they could keep up the gross margins or whether they're continue to drop a little. And this is, again, from very high levels.
Yeah, I mean, that was our main concern as well. And whenever you launch a new product, and make changes to it, you have to you even write off some older inventory or inventory that's no longer useful. They had a larger write-off than usual last quarter, but we think that's going to get less and less as we go through. And what we're seeing is them moving past that gross margin issue. So what should happen is gross margins go down a little bit for a quarter or two and then turn. We see gross margins in the mid-70s, which can power close to $5 in earnings power, that they can demonstrate over the next 4 to 6 quarters.
The stock was down about 2% in the calendar third quarter. What about the fourth quarter? What makes you think that this is going to be the time that things really turn around?
Well, I think that the street this time, so last year as well, third quarter is a tough time for semis anyway. And for Nvidia, they tend to do the market tends to really hype things up in the first half and then digest it in the second half. And this year, a lot like last year, what happens around this time is folks start to say, yeah, I know next year is great, but what about the year after, meaning 26? And I think the street this year is going to discount a little quicker that things are okay. They have that huge show in March called GTC, and we think they'll unveil the Rubin chip for 2026 there. They've already talked about it, but we'll hear more about it. And then you'll realize, oh yeah, 2026 is a growth year, and it's a pretty big one. And the market probably discounts that a little sooner than they did last year because Jensen is obviously gaining more and more credibility, which is obvious.
Meanwhile, let's not overlook the subplot in this enthralling corporate saga. SK Hynix has comfortably leapfrogged certain competitors, namely Samsung, whose shares slumped due to unforeseen production delays. SK Hynix's strategic investments in HBM and competitive edge in memory chip technology have not only shielded it from such pitfalls, but allowed it to bask in the limelight, as evidenced by the optimism from industry gurus and analysts, as Goldman Sachs and Citigroup sweetened their outlooks, raising stock price targets. The narrative wasn't just one of overcoming adversity, but rewriting the obvious. AI's demand is an ever-expanding universe, and SK Hynix is establishing itself as a foundational pillar of this cosmic shift. Kim Kyu-hyun, marketing wizard behind SK Hynix's DRAM proliferation, delighted analysts with a confidence-laden quip, "It's premature to talk about demand slowdown. Computing power demands are ceaseless." For once in the cryptic world of stocks, it seems the future is on a clear trajectory. Harnessing the momentum of generative AI and other advancements, SK Hynix is betting big on the increase in memory chip demand, poised to throw capital, 10 trillion won and some more, into the fray for what's expected to be a booming 2025. So, in a world where markets can sometimes appear as unpredictable as an unannounced Netflix cancellation, SK Hynix is not just riding the AI trend, but very much steering it. With revenue surging 94% year-on-year and the company stabilizing its once volatile narrative into one of hope, growth, and high-tech marvel. It stands not just as a player in the circuit board-packed universe, but a leader charting new paths. Their boastful boast? The AI memory industry's recovery isn't just a distant promise, it's happening now. For investors, such an assertion garners a gaze that is both envious and enticed. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Of course, technology did okay in part because semis. You always focus on the semis. Nvidia now creeping higher. Let's say Nvidia breaks and makes a new high. Do you think that creates sort of a groundswell of new buying?
Yeah, it's at a new, as of the second closing high. It's not at the intraday high, 140 and change. We've had about 80% of the move since January on that original breakout. And all I can tell you is when you have 100 to 200% sales growth, and then the CEO comes out and says demand is insane, the markets act accordingly. And so far, so good. We just bought a bunch again. So yeah, I think it's higher. Today they woke up the semiconductor equipment makers. That's Applied Materials, Lam Research, KLA 10 Core. I know ARM holdings broke above resistance today. So I think, and semis have been lagging. If they get going again, that'll just fuel even more. So we're in one of those markets right now where you always look over your shoulder, because when it gets a little too easy and a little too good, you're like, when are the scare days coming? But so far, so good. And today I'm finding new names, even today, breaking out of range, which tells me the market's broadening even more.
As we draw the curtains on this riveting recount of SK Hynix's record-breaking quarter, one thing becomes strikingly clear. Opportunity doesn't knock, it equips, with a year-to-date stock gain worth of 39%, not to mention a buoyant trading figure of 198,301. SK Hynix isn't just nesting past laurels, but fortifying its future. Their strategic focus on evolving product lines, meeting AI's unyielding demands, and deftly optimizing production speaks of a company not just reacting to market forces, but diligently shaping them. Analysts delight in the prospect of continued expansion, ensuring this isn't a one-time wonder but a sustained ascent. Looking ahead, SK Hynix's forecast is nothing short of sunny, with its financial barometer pointing towards stability, high-capacity growth, and the embrace of new advanced DRAM innovations, sparked by the exponential growth trajectories set forth by AI's boundless potential. Investing in SK Hynix today is akin to securing a front-row ticket to what promises to be a fantastic performance of technological triumph and market leadership. What are your thoughts on this powerhouse taking the AI sector by storm? Are you aligned with the analysts eagerly raising their stock price predictions? Or does the market's capricious nature foster a more cautious stance in you? Whether bullish or bear-hearted, your insights are the pulse of this dynamic world, and your voice, a vital thread in the ongoing tapestry spun by industry giants like SK Hynix. And finally, if you would like to know what companies like SK Hynix have been up to these past few days, go ahead and click on the next video on your screen. See you there.